three recent IPOs were Airbnb, DoorDash, and Snowflake. And the issue is all three of them floated less than 10% of the company. So you had this huge demand for these growth stocks and a scarce supply, and as a result, you saw huge pops off the IPO. So for instance, the old saying, price is what you pay, value is what you get. Well, you paid a huge price. You certainly got value, but maybe not as much as the price that you paid. For instance, Airbnb traded at 25 times sales, not earnings, sales. DoorDash, 22 times sales. Snowflake, 267 times sales. And only one of those three companies is actually earning money today, which is Airbnb. So what you have here, Rachelle, is the market is pricing in perfection. There's massive liquidity in the system. And the bankers simply mispriced the offerings and left billions of dollars on the table for the companies. Each of those three companies only raised about a $3.5 billion raise of equity at valuations between $30 and $40 billion. But post-IPO in the secondary market, there was a huge retail demand, and it drove those valuations up in the case of Airbnb to $100 billion peak, in the case of DoorDash to $65 billion, and in the case of Snowflake to $120 billion. And if you compare Snowflake to its pre-IPO private market valuation, it was just $12 billion. So it went up 12 times. I don't think the business became 12 times more valuable just because it went public.
And you raise an interesting point, because according to research by Dealogic for Axios, IPO investors have made a record-breaking $50 billion so far this year just by being allocated stocks and holding on to them for a single day. So as you look at some of these windfall IPO profits for some of these large Wall Street firms, how real are the concerns about a bubble, and what can be done about it?
Yeah, well, the solution, this is certainly a pocket of froth. You do have massive liquidity in the system. But the solution is you've got to simply offer more shares, number one. Number two, you have to lower the time frame of the lockups for insiders. Let the insiders sell some stock at the opening to keep those huge pops from happening. And then the third thing that's really starting to become popular is the direct listings, in which case the market determines the price, not a handful of bankers in their offices on Wall Street. So you can just go to market like Palantir did, and the market determines what's that fair value, and insiders can actually sell stock on the offering day.
Now, as we see, a lot of these newer brands like Airbnb or DoorDash or Poshmark don't actually sell a physical product. They're a platform. So how do you see these service-oriented platforms faring in the longer term, especially as we shift out of the pandemic eventually?
Yeah, I think you bring up the most important point, Rachelle, because typically in a new business cycle, the companies that dramatically outperform are not the tech companies. The tech companies are the ones that do well in a slow growth environment, like you saw FANG earlier in the year during COVID. When GDP is growing less than 2%, managers like myself have to pay up for those small areas of the market where you can find earnings growth. Now that we're starting a new business cycle, and we'll probably see 5 to even 6% GDP growth in 2021 in the United States, managers like myself, we have a tremendous amount of opportunity, many places where we can purchase earnings growth, and therefore it doesn't make sense to pay up for just the tech stocks when we can now get it in cyclicals. You're starting to see earnings power come into banks, defense stocks, even energy, industrials, materials, whereas in a slow growth economy, those companies don't grow. Now they're starting to grow again.
So then which companies are you keeping an eye on for IPOs heading into 2021, hopefully in a post-pandemic investment climate?
Yeah, well, the one that my 5-year-old and 8-year-old daughters keep out is Roblox, because they spend half their day on it. It's an online gaming company for younger people. So that was delayed because the CEO saw that this market was a little too frothy and it would hurt the insiders to get out in this type of market. So he's going to delay that IPO. That's something we'll take a look at if the valuation is reasonable. But for now, we're going to stick with the stalwart companies that we know are going to do well in the new business cycle. Just simple industrials, materials, banks, financials that have been left behind in the pandemic are now going to start to perform coming out into the new business cycle.